What's going on, traders? Welcome to my office and welcome to my channel. This is Trading Test Lab, where we test YouTube trading strategies to see if they are as profitable as they claim. Today we will test out a strategy from Trading Lab that claims an 86% win rate. This strategy is called Best MACD Trading Strategy with 86% win rate. This one has 2.7 million views, so it has proper influence. And after watching this strategy, I do like this strategy, and he says you could trade it in every market, so we will test this on the Nasdaq. Now let's go over how the strategy works. So with this strategy, we're going to use two indicators. You have the MACD and then you have the 200 EMA. To look for buys, we need price to be above the 200 EMA. So he has this red line here is his 200 EMA. And then we need a cross of the MACD below the zero line to be clear for a buy. Then for sells, you need price to be below the 200 EMA. You need a cross of the MACD line above the zero line, and then you're clear for sells. And also in this specific strategy, the MACD settings are the default. Stop loss he likes to use is he puts it above or below the 200 EMA, depending on if it's a buy or sell. I'm not going to do that. I think I'm going to use the latest swing point. And then for his TP, he uses 1.5 risk reward ratio, and we're going to keep that the same. So there's a high level overview of how the strategy works. And honestly, I think that's all we need to begin trading it. It's pretty simple. I like it. It should be a pretty profitable strategy, I believe. So let's go over a few examples and then we can begin the backtest session. Here is a sell. So first we notice that price is below the 200 EMA. So we are clear to look for sells. Now let's take a look at the MACD, and we have a cross above the zero line. We're clear to look to enter on a sell. So we take the close of that candle that produced this sell signal. We put our stop loss above the swing point. He puts it above the 200 EMA. I'd rather put it above the swing point. Shoot for 1.5. And there you go. Okay, now let's look at a buy setup. So here is price above the 200 EMA. So we are clear to look for buys. On the MACD, we get a cross below the zero line. So now we can look for an entry. So we could take this nice candle here. Take a long position, price below the swing point. Stop loss below the swing point. Go for a 1.5 to 1, and here you go. So it's a very easy strategy to use. I think it's going to be a pretty successful strategy. So now that we understand how the strategy works, let's get into the backtest session. As always, we'll be trading the Nasdaq, one trade per day, New York session, you know the drill. In this strategy, we're going to be doing the 5-minute candles. I asked AI to give me a random year and a random quarter in the last 3 years to backtest, and it said to do Q1 of 2022. So we will backtest that. We will go over a few of the first examples live, and then we'll fast forward to the rest, and then we will go over the results at the end. So here we are on the chart. This is the Nasdaq. We're going to be trading New York session, one trade per day after 6:35 a.m. I did say I was going to be trading the 5-minute candles, but after thinking about it, if I'm going to be trading the 5-minute candles, we're not going to get that many trades in a quarter. So I'm going to actually do the 1 minute. That way we get a pretty good sample size and we could collect a decent amount of data. So we're actually going to do the 1 minute time frame. So today is Monday, January 3rd, 2022. Let's go to the next New York session, the beginning. We'll go 5 candles pass, so it's 6:35. 1, 2, 3, 4, 5. And now let's start. Okay, so we would be looking for sells right now. We need MACD to go back into the buy area. If we get this cross right here, cross, that is at the again, so a bit. So when price is going to be chopping back and forth with 200 EMA, I'm not even going to be looking for trades. I want it to be making structures under or above it to be looking for trades. Like this here. It needs to be not be chopping next to it, because that just tells you that the market is ranging. So we need to see some structures being made above or below it. So this is just, it's not doing anything. And this is when most people lose that trade, and they try to trade in these ranges, or they expect a breakout, but just wait for price to do something, be patient. That'll improve your odds. Okay, so now it looks like we're starting to trend. Now let's see if we could get, okay, then after noon is when I'll go to the next day. If there's no trades by noon, then we want to look for trading and no trades. Usually I stop trading by 10 a.m., but I want to see how many, trying to get a good sample size of trades. 1, 2, 3, 4, 5. Okay, looking for sells currently. Price just melted down. Okay, great. Okay, so now we're below the 200, we're clear for shorts. Price has come back above the 0 line on the MACD. So let's see if we get a cross. Okay, there's a cross. Let's go ahead and take this. Seems like a swing point here. Let's go short position. Put a safe distance away, 1.5. Risk 1%. And let's see what happens. First trade is a win. There you go. So let me log this and then we'll go to the next day. One, two, three, four, 5. We'll do 2 more examples and then I'm just going to fast forward to the rest and then we'll go over the results. So we're going to be looking for sells currently. Now we are not looking for anything. Our price is above. We need to see some structures above or below, not doing this back and forth on the EMA. Okay, so now we're below it. This probably could have been a trade here, but below it. We got a cross. No, that's too close to the 0 line. I wouldn't say that's valid enough. Okay, so we're below the 200 EMA. Made a swing, got a cross. Let's go for it. Short position. Stop loss safe distance, 1.5. Here we go. Two wins in a row, 2 for 2 thus far. All right, go to the next day. All right, next day. 5. Looking for longs. Okay, now we're not looking for longs. We're looking for shorts. Now we're not looking for anything. Price is chopping back and forth. We don't want that. Hold some structures above or below. Okay, starting to trend upwards. I'll do one more live example, and then we're just going to fast forward the rest. Okay, can this hold any structure? Okay, got a cross here above the 200 EMA. Taking a long. Safe distance from the stop loss, 1.5 to 1. Okay, so out of 3 trades, we have 2 wins, 1 loss. That's how the strategy goes. This one actually got really close to hitting TP, but that's the business of trading. So I'm going to fast forward to the rest and then we'll see how it goes. But thus far, it's looking pretty good. And here's the results of the finished backtest session. We had 56 trades, 26 wins, 30 losses for 46% win rate. So much less than the 86 that the video says. 8.8% gain. And one thing I want to pay attention to is this is the first strategy on my page that I've done that we have a negative month. And it's actually a good thing, right? Because this shows the realities of trading. Not every month is going to be a positive month. I can almost guarantee with every strategy I've done on my page, one of these months, or at least one of these months, would be a red month. It's part of trading. It's part of the business. So the first 2 months, decent, not the best, not the worst, but decent. But look at March. And we ended March with a 6 trade losing streak. So we were at a 6% drawdown right at the end of this backtest session. So we had a 3 winning streak, a 3 winning streak, and then bam, a six trade losing streak. And this is what happens in trading. My strategy gets, sometimes I'll get a 6 trade losing streak, 7 trade losing streak. It's just part of the business. No matter how good the strategy is, you're going to have these losing streaks. And what most people do when they hit this losing streak, they'll hit this, they'll say, oh, this strategy sucks. And then they'll switch strategies. They'll win a couple trades. It'll start to be a profitable strategy. They'll hit this inevitable losing streak. And then they'll say, oh, this strategy sucks. And then they'll switch strategies again. This is called strategy hopping. You keep switching strategies, and this is why you have no consistency. So a few takeaways from this strategy. Even though we had a negative month, just barely negative, I think it's a good strategy. It works off of trend and trend continuations is what I've noticed when placing the trades. I'll show you that in a second. It also seems like my winning trades pushed much further than a 1.5 RR. So maybe I should have did a secondary backtest session where I also did a 1.75 or 2 to 1 to see how the results would have been with that. Another thing I noticed with this strategy is, for the most part, when you're trying to identify a trade, you really don't even need to look at the candlesticks. You can just look at where price is in relation to the 200 EMA and look at the MACD. And then once things start to align, like if price is above the 200 EMA, you can just watch the MACD and wait for it to go under the 0 line. And then you can start looking at price. And once you get the cross under, you can look for a buy. So you don't even really need to look at the price action until the last portions of the trade. Now let me show you what I mean by it kind of works off a push phase and then retracement and then a push phase. So this is what it seems like when I was taking trades. This is what it's looking for. So let's just say this is the 200 EMA. What it seems like it waits for with the strategy. So let's use this part of the MACD right here. So you get this push phase away from the 200 EMA. Then you get this retracement. And then you get, sometimes it'll stall for a little bit. And then it'll push again. So push phase, retracement, push phase. And this is where it looks for trades, it seems like, because you get the push, which gives the MACD just push away. Get the retracement. This is what gives you the cross below the 0 line. Cross below the 0 line here. And then when it starts to push away, that's when you get the cross. And that's when you take your trade. So this is what it seems like it always ends up being when you get the setup on the MACD. You get the push, exhaustion, and push. It's definitely a trend following strategy. It works well. It just happened to hit a losing streak right at the end of the session. So overall, I still think it's a good strategy. It's a simple strategy. It's an easy one to follow. I think it's probably the easiest one to follow I've done on my page. Actually, no, the second one I've done, the chandelier exit and the 0 lag SMA, that one's really easy and it was really good, surprisingly. I thought that one wouldn't have done as good as it did, but it was pretty good. But this one is still good. I think it's a proper strategy. Still got 8% in a quarter. So overall, I'd say it's a good strategy.